You are listening to chartingwealth.com for Wednesday, the 2nd of May, 2018. We see stocks up for the day, bonds and gold down. Let's jump, as we always do, right into the S&P 500 on the weekly chart. So far, this week is shaping up as more of a sideways slide. We see the prior week that ended on the 27th of April was a big doji. And so far, this week is a doji. What is a doji? It's a type of Japanese candlestick pattern that pretty much shows you that there's lots of indecision, opening and closing around the same place on the market. And so far this week, that's what we're seeing. Again, we have red dojis so far. The prior week was a red doji, and this one is red also, which typically means lots of indecision tending down. Now, the prior week, all the way back to the 20th of April, was an up week after before that, on the 13th of April, a green doji after 3 prior weeks of downsliding starting on the 23rd of March, and then the 29th of March, and then the 6th of April. So we've had the market sliding sideways and then down and then sideways again. Market trying to figure out what it's going to do. Now, not just looking at the price action, but looking at our indicators, we see that the derivative oscillator is continuing to lose downward momentum. It looks like it's getting closer and closer to crossing over, going up. Our price percent oscillator, which is our king of indicators, the one we use the most, but again, these oscillators get slippery when you have sideways sliding. These oscillators work great when the market's trending, but they get very they can give you a lot of false signals when the market starts getting slippery, as it is right now. And remember, we're entering into May. What does that mean? We'll sell in May and go away, live to trade another day. A lot of the volume goes out of the market because the big money goes on vacation. So what do we see happening? Well, we see that the price percent oscillator looks like it's headed a little bit down, but really just sideways. So again, lots of indecision there. It means we have to dig a little bit deeper. We look at the 2-day chart. It is actually in a confirmed up move after it crossed over, going up on a 2-day vertical crossover back on the 16th of April. It went up for 2 more days, and then sort of it's been sliding sideways and down. And so far, the first day of the latest 2-day candle is a down candle, but price percent oscillator's up, derivative oscillator is up. So again, sideways sliding, waiting for some confirmation. We have the schizophrenia between the weekly down and the 2-day up, which means we don't have a trade there. We do see that the 4-hour chart crossed over, actually just bounced off the red signal line, had been down before that, bounced off, continued down, and again, it's crossed over going down. End of the day with some up movement, so it paired off the down movement in the morning. But again, we're looking at Heiken Ashi candlesticks. So we saw price movement pass through the weekly trend line on that 4-hour chart. Did end up for the day up 0.17%. So not up much. Derivative oscillator is negative now. So what are we looking for? Well, we're waiting for there to be enough up movement to rotate the weekly chart over going up, or enough down movement to flip that 2-day chart over going down and give us the possibility of jumping into a down move. So we'll continue to keep our eye on things, see how things shape up when they do with the S&P 500. Nice thing about what we do is we're not Wall Street traders. We don't have to trade. We wait for the conditions to be right to trade. The best thing you can do is keep your powder dry when there's not a trade. You cannot force it. You will lose every time. So what do we see going on the Qs? Up a whole lot more than the S&P 500, up 1.14%. But again, we have a green spinning top at best right now on the Qs for the week. That's the Nasdaq 100, the tech stocks. We see that the price percent oscillator, of course, we had a weekly vertical crossover going down back on the 23rd of March. 3 good weeks of down movement. And then, of course, a sideways slide that's been underway for a while. Still negative on the weekly trend and weekly vertical crossover going down. What do we see on the 2-day chart? It's now crossed over, trying to going up, just the first day of the latest 2-day chart, so we don't call it yet. We're not going to move our blue vertical crossover line over until this 2-day candle is completely drawn, and that'll happen at the close of the market on Wednesday the 2nd. But right now, a red spinning top. We have still the derivative oscillator is positive. The price percent oscillator looks like it's trying to cross over going up. That can go away in the morning on Wednesday or the afternoon. If it's a big down move, we saw a down move in the morning on Tuesday, and then an up move in the afternoon and a crossover going up. As far as the price percent oscillator goes, the derivative oscillator stayed positive. So again, we'll continue to keep our eye on things, see how the week shapes up as far as the weekly and the 2-day, and if we end up having some confirmation with a down move, which we don't now, with that 2-day crossing over going up, entering that same sort of schizophrenia zone that we have when the 2-day and the weekly are opposite. So we don't have a trade when that happens. If indeed things flip around, both start going in the same direction, we'll help you look and see if we have a good practice trade to jump into. We don't now. What's going on TLT? Well, on TLT, we're going to start with the weekly chart down 0.58% for the day. So far, it's a green spinning top candle, means indecision but tending up. We do have a decent size wick, actually larger than the candle on the bottom and one about the width of the candle on top. Derivative oscillator is losing momentum. Price percent oscillator looks like it's trying to cross over going down. Now that's the first 2 days of this latest week. We'll continue to keep our eye on things, see how the week shapes up. We thought TLT might cross over this last week going down, didn't manage to do so. So again, still in a confirmed up move, so we'll keep our eye on things. We look at the 2-day chart. What do we see? It's, of course, in a confirmed down move. It crossed over going down back on the 2-day candle ending on Friday the 20th of April. 3 down candles and then sort of a sideways slide at this point. So far, the latest 2-day candles, a red spinning top, means indecision tending down. We'll keep our eye on those things. Maybe by the end of the week, we'll have a crossover going down in bonds. Might offer us some trading opportunities. The 4-hour chart, of course, crossed over going up in the afternoon on Friday, went on up on Monday, and then Tuesday down. As far as our Heiken Ashi candlesticks go, derivative oscillators in the positive, losing energy, price percent oscillators in the positive also. So again, don't have any moves that we can get into at this time on TLT. We'll continue to watch the charts, and if indeed we have that weekly vertical crossover going down at the end of the week, it might give us some opportunities to jump into a down trade on bonds. Lastly, we go to gold. What do we see in gold? Down for the day, 0.71%. We see that we had a weekly vertical crossover on gold all the way back on the 16th of April. But for the next 4 weeks or so, gold actually climbed and then rotated over hard, going down on the week ending Friday the 27th of April. And so far this week, another down move. Now, of course, remember, gold's in a confirmed down move, and when that 2-day chart lines up with it, which it did back on the 24th, the candle ending on Tuesday the 24th, we've now had 5 down candles, or the latest candle is still forming, heading down. Nice trend lines that are connected. Derivative oscillator gaining downward momentum, price percent oscillator headed down. And what do we see about our 4-hour chart? Well, the 4-hour chart has not had a pullback for an entry point for us yet. It did pull back for 2 candles back on the 27th and then rotated back over going down. We're waiting for a pullback in the 4-hour chart to give us a safe jumping in point. Now, a lot of you get excited and interested in trying to figure out ways to jump in safely, and it's really hard to do so. You can try to go to something like the 2-hour chart, but again, that's tough because it is, again, half the size of the 4-hour wave and is not necessarily accurate. The same also with just trying to use candlestick patterns to jump in. Yes, you could have tried using the 2 up candles on the 27th and jumped in after that, but again, no guarantees there either. The safest way is to wait for a pullback on the 4-hour chart moving in the opposite direction and then jumping in to that down move. That's where we are as we end the day on Tuesday. Stick with this. This is the hardest time of the year to find trades and to trade. But what's going to separate the winners from the losers are the people that stick with it. Because, my friends, The market will not give you the riches you hope for until and unless you dedicate the time and energy. And it's 10 minutes a day, every single day. Those who stick with it will reap the rewards. Those who want to get rich quick will not. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters. Don't forget, pre-order our book. We're getting it back from the printers here very soon. You can order it now. You can see the links at our YouTube channel and also at chartingwealth.com under the daily market reviews that we post, and it'll link you right into where you can pre-order it. Thank you so much, my friends. All the best from the whole team here at Charting Wealth World Headquarters.